3 easy steps to follow when you want to investing, even in rough market conditions. Hi, I'm Michael and we talk about investing and personal finance. So, how to behave in a bear market. And I hope that the following 3 steps will help you to be a better investor, even in rough market conditions, even in the market conditions that you see right now, where everyone is panicking, everyone is just selling their stocks, everyone is just very concerned about what happens to their investments. But don't worry, if you follow those 3 steps that we will go through now, you will become, or you will create good and you will do good investment decision. If you like what you see, subscribe to my channel and you can follow me on Instagram as well. I'll post regularly updates on current market conditions. And now right into the video. So step 1, create a plan. Think about what you want to do and how you want to invest. You do that before you even put money anywhere. So before you put money into your account, investing account, before you buy anything, you create a plan and write it down. You can start thinking about in what type of investments you want to put your money in. Do you want to invest in ETFs? Do you want to invest in companies directly, in stocks? Do you want to invest in bonds? Or do you want to go and invest in real estate? Do you want to buy your own rental property, for example? So try to think about what type of investment would basically fit your investment style and your risk aversility. So how likely and how strong you are with risk. Another thing to consider is how often you want to invest. Do you have a big pile of money that you want to invest now and you want to invest it into something right away? Or do you want to do it step by step and you basically want to invest in little sections with little buckets of money? And I think it's always a good idea to create a bit of a investment plan for a longer time. So even if you have a big pool of money, try to invest it in little chunks over a specific time. That certainly helps buying into different market situations, but also it's at the start you are not invested in just one thing very heavily with a big lump sum of money. The second thing is, if you have your unique plan, you should stick to that plan. So even if the market conditions change, try to stick to your plan. Yes, a plan can change, but you should not change your investing plan just because the market conditions have changed slightly just right at this moment. Try to take a step back and think about your actual situation and try to think about your situation when you created that plan. Would you decide the same way if you would be again in that situation? So don't change your plan just because there is a rough market condition at the moment. Maybe that can be even very beneficial for you. If you created a plan where you put in a little bit of money into the market on a monthly basis, for example, this can be a great opportunity to buy really cheap shares or ETFs. So whatever you do, try to stick to your plan. And Warren Buffett is saying more than 90% of investors should just invest in a simple product like ETFs. So don't make it too complicated. Don't think about too much in what you want to invest. Try to go for the broad market and invest regularly into an ETF, for example. And then, I mentioned already, do that for a very long time. Investing into the share market is a long-term game. So you do that for a long time. I would not recommend buying into the share market if you want to access the money within the next 10 years, for example, or even less. So don't buy into shares if you have just 1, 2, 3 years, 5 years. Something or everything more than 5 towards 10 and even more than 10 years, that's when you can go into the share market. Over the last 100 years, there have been no 10-year time period where the market did not increase. So when you see the market going up for a 10-year market period, it always went up. So and that obviously comes with your risk again. So if you are long in the long time in your investings, then the risk is reduced because the chances that you will end up with a profit are very, very high if you are invested for the long term. That's why, especially when you think about retirement products, think about investment products, and especially when you then start very early and you have a very long time, probably 40 years of investing, definitely think about investing in products that are then again diversified across stocks. I hope this 3-step strategy helped you to get an idea about what you do even in rough market conditions. So do not just question yourself straight away just because you see the market down. If you do it for a long time, it can still and it will still work out in your favor. So create the plan, stick to the plan, or make changes just when you actually are in a good mindset for it. So don't panic, and invest for the long term. These are the 3 things that I can recommend you doing. Thanks very much for watching the video, and I will see you in the next one. Bye.